makes the euro worth 91 pence.
Thanks, Tom. Few, I suspect, will mourn the demise of payday lenders. Hundreds have already shut up shop since previously eye-watering interest rates on short-term loans were capped at slightly less eye-watering levels. And now the future of one of the biggest and most well-known, Wonga, hangs in the balance. The company says a surge in compensation claims for those mistreated before the caps came in threatened to bankrupt the company. One of those is Katie, who spoke to The World at One today.
I was a student struggling to make ends meet, as many do, had a minimum maintenance loan and a very small 0 hours job, which couldn't always guarantee me money in. And desperate and looking for a little bit of extra support, I started taking out a few payday loans with a few different companies, including Wonga. A quick check of my credit file would have showed that I was borrowing from several payday lenders, that my income wasn't high enough to make those ends meet.
Well, she's now seeking compensation from Wonga on the grounds of inappropriate lending. But the short-lived success they had shows there is demand for this kind of short-term loans. And when they're gone, where will people go? First of all, Alan Campbell, a financial services specialist who wants to see the back of them. And you've got a plan to do that. What is it and why are you doing it?
The plan is essentially to hold the lender to account. At the moment, the lender has a responsibility not to provide borrowers with unaffordable lending. And what we want to do is to hold them to account, just like that young lady said. Where a lender lends unaffordably, and affordability is not by definition that the loan is repaid. Affordability is, does it make your financial situation worse? So where a lender lends in a way that makes your financial situation worse, so you miss a bill payment, you go without food to repay, that's an unaffordable loan. And in those circumstances, you're entitled to reclaim the entire interest and the entire level of charges. And what we're trying to do is to make people aware of the lender's responsibility. For too long, people have been saying to borrowers, you're feckless, it's your problem that you got yourself in this situation. But the lenders have walked them down that road and then left them there in an insolvable financial position.
And your campaign involves doing what? And you're not a claims management company yourself. You've got no economic interest in this. What are you doing it for? And how are you going to go about it?
OK, but what we're doing is we've set up a not-for-profit organisation. And that not-for-profit organisation is firstly going to educate the public as to what affordability means. So if that loan was bad for you, if you struggled to pay it off, if you had multiple of loans, it was probably unaffordable. And this is in respect of loans which have already paid back. And we'll be saying to the borrower, you have no downside because the lender can't even put the fact that you claim on your credit file. And if the lender doesn't meet your claim, then you've got the right to take that claim to the Financial Ombudsman Service, and that will cost the lender £550 each time you do that. So in circumstances where lenders are now being faced by claims, they have 550 reasons to make a settlement to that borrower.
OK, well, listening to that is Peter Tutton, Head of Policy at the debt charity Step Change. Now, as I say, few people will mourn the demise of payday lenders. I mean, first of all, would you say good riddance if Alan Campbell is successful and he, makes them extinct? I just wonder what people will do when they need short-term cash.
Well, on the first part of that, I think that's remember back to what was happening with payday loans. And what we were seeing was, an explosion in people coming to see us who had payday loan debts alongside other debts quite often. But also the nature of the payday loan debts and the nature of the sort of payday loans was causing people extreme hardship, often alongside some bad practices, very bad collection practices, people being charged more and more, money being siphoned out of their account, leaving them with nothing. So the way the market was working was causing a lot of hardship, a lot of detriment, and it's absolutely essential that the FCA, the Financial Conduct Authority, got on top of that and made sure that these kind of practices and loans that weren't really suitable for often financially vulnerable people are still there.
Now, are you happy that they did that and that they've done their job?
Well, absolutely. Absolutely. I mean, we campaigned hard on to raise the problems we were seeing with payday loans, and I say it was absolutely essential what the FCA did. Now, that to say the job is not done. There are still issues in the credit market, and there are still issues with high cost credit that we're seeing now. But the point is that there is a process whereby the regulator is getting on top of this and trying to make these markets safer. Now, on the other side, we reckon about 1.4 million people having to use high cost credit just to make ends meet. So there is.
If Alan Campbell is successful and he gets rid of all the payday lenders because of their previous misdemeanours, where will those 1.4 million people go?
Well, there's a couple of different bits to that. Firstly is the understanding that the people are using high cost credit is often not going to be a good thing, because repaying that credit is going to make financial difficulty even worse. So the strategies people are using to get by this month may cause further problems next month. So just the fact that people are using it and there's a demand for it doesn't mean that by itself it's a good thing.
OK, let's say I've got a legitimate need for it. Am I going to family and friends? Am I going to a credit union? What are my options?
So people are doing all of those things. So actually the number of people we're seeing borrowing for emergencies is much bigger than those using high cost credit. So people are doing things like families and friends, other sorts of credit unions. That's happening. We need to grow things like credit unions, third sector lenders, give people a safer alternative. If you break down what people are using high cost credit for, one of the things that we saw is that people were using high cost credit. They were in serious financial difficulty. They couldn't afford to repay their loans, and they were using high cost credit to try and sort of keep paying things and stay on the road. So if creditors are giving better forbearance, directing people to advice, where people are using high cost credit for things like trying to pay a bill, we might expect that creditor of the bill, the fuel company, to offer people payment facilities.
It sounds to me like you haven't got an easy answer to where people need to go if they actually need that cash. You're saying we need to grow credit unions, but there's no easy alternative at the moment. It's all very well telling the electricity company to back off for a bit, but sometimes that's not possible.
There isn't an easy answer, and that's part of the point, really, that there isn't an easy answer, but high cost credit isn't a good answer. Okay. So there are some people that can use alternatives. Right. There are some people who can use high cost credit safely in a well-regulated market.
Okay. Let me put that back to Alan Campbell. There's some people who can use high cost credit safely. What's going to happen once you've seen off the payday lenders?
Basically what we're doing is we're making the lender bear the cost of lending unaffordably. And the easy answer is that when they bear that cost, they will no longer lend unaffordably. It's a remarkable...
So the market forces will work, and so instead of making X return, they'll make a lower one.
Yeah, and to that point, the most profitable company in the world today is Apple. It makes a 27% return on capital employed. Provident Financial make a 23% return on capital employed. Okay. They have great scope to reduce their prices to give people affordable finance.
All right, Alan Campbell, Peter Tutton, thank you both. Perfectly good business. What you're saying is there, and someone will come along and do it in time. Thank you both. Women like me aren't supposed to run.